Hey everybody, I'm hoping to open the chat here. So I need somebody, one of our regulars on here, to let me know if you can hear me okay. Need to know if my volume is okay. There comes my feedback. But anyway, let me know. Say hey. Hey everybody there on YouTube Live. Hello Keenan. Great to see you on here. Where are you from? I'd like to know where you're from and what you're doing in real estate now. That would be awesome while we get started here. Hey John. Okay, so John says you can hear me fine. So if the volume at any point gets out of whack, let me know. If anything else goes wrong, would love to hear from you because I can't really tell from my end. So glad you're here. Love to hear from somebody on BiggerPockets Live. I can see people coming in from YouTube Live, Facebook Live. Thank you so much for being here on a Saturday morning. What are you doing on Saturday morning? I thought you were supposed to be sleeping in. Well, real estate investors don't always get to sleep in. You know, I've said for years, it's great being a serial entrepreneur. You can choose. You have the freedom. You have the choice to choose any 80 hours a week you want to work. And I don't believe that anymore. I believed that for years. I believed that entrepreneurs always had this freedom to choose the 80 hours a week we wanted to work. But the more I get into passive real estate investing, the more I realize that's not necessarily true. So I'm excited to continue to grow in my own passive real estate investing and hope that you will join me. So we're going to give a few more minutes for everybody to get on board. We're streaming. Hey, TD Mason, 8 o'clock on the West Coast. Thanks for being here. Andrew, how are you? Ivan, what's up from Toronto? So glad you're here. Hey, guys, I want to tell you, on the Facebook chat, for some reason, and this has happened to me 2 or 3 times in a row, I've not been able to see anything other than the current little block of comments. So if you don't get your question answered and you're on Facebook, you can understand that I've lost it. It's kind of gone up in the screen. So feel free to copy and paste and ask it again, especially if you're on Facebook. YouTube doesn't seem to have that problem. And the BiggerPockets Live panel doesn't seem to as well. So let me know where you're from. Please give us a like. Give us a share. It would be awesome if you can share this. Brandon Turner's got the record number of shares to my knowledge with 90. Would love if you would share this. It really helps BiggerPockets know what you're thinking. If you don't like it, I don't know if there's a thumbs down panel, but feel free to tell me why you don't like it. We're going to get started here in just a minute. We're going to be talking about whatever is on your mind today. I've done about a dozen different things in the real estate investing world. I've made money. I've lost money. I've made a lot of money, lost a lot of money. And so hopefully I can help you in your real estate ventures. I've got a podcast called How to Lose Money. It's a wealth building podcast, believe it or not. And I've had some guests or prospective guests who have been unwilling to come on because they didn't want to tell the world how they lost money. But anyway, keep those comments coming, and I'm so glad you're here. Donna, great to see you from Raleigh. Donna, we're looking at a self-storage unit in Raleigh right now. So, man, your county, Wake County, is really growing. Hey, Dustin from Minneapolis, welcome. Christine from New Jersey, how are you? Hey, Mark Carpenter in OKC. New York City, Doniski FS says hello from Houston. Thank you so much for joining us. Ramsey says, please, can I ask you first? Sure, go ahead and ask a question. You guys can start giving questions, but it's a little early for that right now because I'm going to go over 10 reasons not to invest in real estate. So we're going to go over that first to kick this off in a few minutes. It's only 4 minutes after the hour, so we're going to let a few more people join. Angel from Boston, hello. S.King6, hello from Georgia, hello. Marcouche, truck driver from everywhere. How's it feel to be from everywhere, Marcouche? That would be an awesome thing to say. I want to give a shout out, and our thoughts and prayers are with the people of Redding, California today. I don't know if you guys have been watching the news, but they've lost at least several hundred, maybe 500 or more houses and buildings there. So I'm kind of keeping up with this because my daughter lives in Redding, California, and she's here back in Virginia with me for the summer, but a little concerned about what's going out there. So please keep your thoughts and prayers with the people of Redding. Hey, Brian Haskell from Anchorage. What time is it there? Edgar, hello. Kevin, you can scroll. Yeah, Kevin, I know I can scroll, but I've got a millennial assistant, and he agreed with me that for some reason my Facebook's panel will not scroll right. And when he agrees, I know it's true because he's an amazing 24-year-old millennial and he's very high tech. So, hey, Jeremy from PA, Debbie Riken from Kansas City. I think I've seen you before on here. Jeremy West. Hey, how are you? So glad you're all here. Please give us a thumbs up, a heart, a shout out, a share. It would be great if you would. Hey, Colette and hello from Dallas, Fort Worth. How are you? Mr. Madskillz from Orlando. Thank you for joining us this Saturday morning. Hey, Simone. Gil from Florida. Martin from Indianapolis. Marcos, how are you? Well, the new tax laws dramatically improve our tax liabilities as flippers. We're going to get to that. I don't think I have a great answer. I'm not a tax attorney, or I don't play one on TV. I promise, guys, that really was funny in the 70s when I grew up. Sorry. Anyway, as flippers, I think the tax law will continue to help everybody. And if you look at the 3 or 4 major new provisions of the tax law, did you guys know the 1031 tax deferred exchange was outlawed for airplanes, cars, trucks, boats, but it was kept in place for real estate? So another reason to be a real estate investor. But in a minute, I'm going to get into 10 reasons not to invest in real estate. And I hope my BiggerPockets friends do not fire me for this. But Zach, if you're watching, I'm sorry. I just feel like I need to tell our audience the truth. 10 reasons not to invest in real estate. We're going to get into that in just a few minutes. Hey, DJ, Lillian, glad to see you. Marcos, wow, a lot of people joining us this morning on a Saturday. Didn't know how it would work Saturday early morning, but we're really glad you're here. Hey, Frederick Stitch from Michigan. I used to live in Royal Oak, Michigan. I lived in Wayne. I worked in Troy, worked in Bloomfield Hills, Michigan. Hey, Vianney from California, praying for Redding. Yeah, that's great. I'm glad people are praying for Redding, California. Keep them in your prayers and thoughts. Asim, hello. Okay, thank you so much for joining. I lost my house in Sonoma, California from the fires last year. Oh, I'm so sorry, Blackjack Guru. I'd like to hear what you're doing now. Sean from Irvine, glad to see you on here this morning. Dizo, Orlando, Flood of Sins is back from Fayetteville. Thanks, Flood of Sins. Okay, we're going to get into 10 reasons not to invest in real estate. And like I said, I hope I don't get in trouble here. Hey, Michael from PA, Jules, DJ, Kevin Stewart, right? Those younger know their social media. Yeah, Jason. Hey, Jason, how are you? All right, so we're going to get into 10 reasons not to invest in real estate. Do you remember David Letterman? I know you're retired, but he had the top 10 reasons for doing things or not doing things. So we're going to get into the top 10 reasons not to invest in real estate. And what I'm going to ask is that you give us a thumbs up, thumbs down, like, tell us what you think. And if you like this, maybe next time I'll do 10 more reasons not to invest in real estate. So here we go. So number 1 reason not to invest in real estate. Drum roll, please. You really love your savings account. Reason number 2, you like paying taxes. That's fun. Number 3, you'd rather own paper than a physical building. Reason number 4, not to invest in real estate. Your mattress would not be as comfy without all that cash stashed underneath it. Reason number 5 not to invest in real estate. You're wary of the term mailbox money. It scares you. Reason number 6, you want to make sure stockbrokers get their fees. After all, they don't make very much money, right? Okay. So reason number 7 not to invest in real estate. You prefer CDs, either the banking product or the music variety. Hey, I'm not here to judge. So you like CDs. Reason number 8, you'd rather work for your money than receive passive income doing next to nothing. Number 9 reason, you want to teach your kids the good old-fashioned values, including putting every penny into a savings account and working 80 hours a week. And reason number 10 not to invest in real estate, you don't mind losing money to inflation. Life is more fun when you know that every penny you have today is worth less than it was yesterday. Okay, so if you liked our top 10 reasons not to invest in real estate, give me a shout out, give me a like, give me one of those smiley, laughing faces, hearts, thumbs up. Share this with your friends. We're trying to beat Brandon Turner's record of 90 shares. So anyway, thank you so much for joining. Hey, okay, so I'm getting some BiggerPockets people on board. Hey, Danny from Alabama. Farhan Ahmed, good morning. From Bradenton, Florida. Hey, we just invested $2.8 million in a self-storage facility near Lakewood Ranch in Bradenton there, right off I-75. I was there about 6 or 8 weeks ago. So very excited to be investing in that. Hey, Mark. Hey, Sarah. All right. Mark says he's going to throw up. Oh, man. I'm sorry. Hey, Kevin. This is great. So thanks for joining. If you didn't hear me, my Facebook questions are scrolling in a really strange way, and it's not really easy to continue to see the questions that were asked earlier. So what I'm going to do is we're going to talk about real estate investing basics today. And what I'm going to do is briefly tell you my bio, which might stimulate some questions. While I'm telling my bio, please input whatever questions you have, whatever you want to ask. I would love to hear your questions. So Donnie did it from New York. Hello. Logan Brown. Brilliant. Thank you. Getting a lot of thumbs up here. Angel from Lawrence as well. All right. Reverse psychology. Yeah, it is. You caught me, Roxco. So, all right. So I'm going to briefly tell you my bio. I got an MBA after getting an engineering degree at Ohio State University. And I went to Ford Motor Company, and I loved working at Ford, but I actually had an entrepreneurial fire burning. And so a friend of mine and I started our own company. We sold it to a publicly traded firm. 5 years later, I was a finalist for Entrepreneur of the Year twice in Michigan along the way, which I was very fortunate to have that honor. And then I moved to the Blue Ridge Mountains of Virginia to raise my kids in a more wholesome environment. We bought 120 acres on top of a mountain, and we divided it up, sold some pieces to some friends, and I got really, really bored. If you guys think that retiring in your mid-30s and planning nothing really entrepreneurial is a good idea, well, if you're as fast-paced and hard-driven as I am, you probably wouldn't want to do that, because I actually became a pretty miserable person. And so about a year or two later, a friend and I tried to start a used car lot for about a week or a month. And then we got into flipping real estate. We made our first flip. And if you go on BiggerPockets right now, you'll see the story of my first flip. It's the most recent article I've published on BiggerPockets as of July 28th when this is airing live. So, at any rate, I ended up flipping dozens of homes, ended up building. We figured if flipping was profitable, then building should be more, right? Well, not always. But built 7 modular homes, a stick-built home, ended up flipping dozens of expensive waterfront lots. And I went from almost $2 million in the bank in 1998 to a decade later having $2.5 million in debt right in the middle of the Great Recession. And so I learned a lot of lessons in that. But I started a real estate website. I have 7 realtors who are still on my team. We feed those real estate leads to them, and they go out and sell houses at Smith Mountain Lake in Virginia. I wrote a book on real estate here for Virginia resorts. And then I wrote another book later called The Perfect Investment, which is about multifamily investing. I've been in multifamily investing for a number of years now. And right now, for those of you who've been following my company, Wellings Capital, we are actually starting to invest in storage units, and we're looking at mobile home parks as well. So I've done a lot of other things along the way, including lease option sandwiches, tried my hand at short sales and foreclosures, built a subdivision, actually just subdivided and developed the subdivision, helped develop another one, developed a ground-up multifamily quasi hotel in North Dakota during the oil boom, and also helped with the development of a high-end Hyatt hotel. So made a lot of money, lost a lot of money, had a lot of fun, learned a lot of lessons, and so now I just want to answer your questions. So thank you again for joining on this Saturday morning. I will see if I can get to some of your best questions. So Mark Hush says, thinking about purchasing, that old scroll gotten me in trouble here. Thinking about purchasing my first home with Americana Real Estate in Zachary, Louisiana, a single family home. Is this a good starter market? I am so sorry, Mar. I don't know how to answer that question, but I would look at several things. Number one, I would look at the net population migration. You're looking for, sure, births and deaths are great, but population migration shows you how many people are moving into the market. You're looking for a market with population migration, hopefully over 1%, because 0.8% is the national growth average of all cities in the U.S. And there are some cities in the north and in California who are losing population, some in the south like Dallas, San Antonio, Houston, Charlotte, Raleigh, who are booming, Austin, growing in population. So you want net population migration that's positive. You want unemployment at or below the national average. You want a diverse economy. You want a lot of different businesses, healthcare, education. You want to make sure it's not relying only on the military or any other one segment of business. And so those are the kind of things you want to look for, Mar. And if you want to purchase in markets like that, and we believe that purchasing in the right market, the right submarket, and getting the right property manager, which I can debate with you guys if you want, are those 3 factors result in about 2/3 of your success in any real estate investment. So hopefully that was a little bit helpful. I do not know that market though. Hey, Nicholas Sanderson, I want to start investing in real estate, but only have 10 grand. What can I do? Nicholas, you can, for almost nothing out of pocket, you can get involved in an Airbnb arbitrage. That's my favorite strategy for low money down right now. I'll tell you the brief. If you guys would give me a thumbs up, a heart, a like, if you want to talk about this more, or just put in the line there, Airbnb, and I will try to hammer this a little bit further. But here's what you do in summary. You go find an apartment that's not 100% rented out, and hopefully it'll be a newer apartment complex. You find the developer and you go, look, you're leasing this up. It's going to take 2 years to get to full occupancy. Give me a discount. Give me favorable rates. Give me a favorable out clause. Let me rent month to month. And then you go in, rent an apartment, do some other things with them, and then you like get discounts on certain things, and I won't go into all that now. Then you furnish it beautifully, professionally stage it, professionally photograph it, and put it on Airbnb. Now, as soon as you've got it on Airbnb, you have a cancellation policy that says you can cancel at any time. You go out and look for a corporate tenant. You get a corporate, so you got Airbnb to pay your monthly rent and all the utilities, and for some of the furnishings. Should be better than breaking even if you're in the right market. We can talk about that later if you want. Then, after furnishing it, after getting all the utilities on, you start renting it to Airbnb, and you go out and look for corporate tenants. Look for nurses who are traveling. For example, we're in Lexington, Kentucky right now. We have tons of nurses traveling to the area, engineers travel, other people travel. You look for those 3 to 6. Did you know 3 to 6 month stays? Did you know that about 40% of travelers of nights in hotels are from people who are on long-term stays? Try to get some of those to your apartment. Wouldn't they rather live in an apartment, a townhome, a garden-style apartment, and maybe even share it with a roommate so they can split expenses? Now, a lot of these people get between $1,200 and $2,000 a month allowance for their housing. Well, if you're renting an apartment that's like $900 and it's furnished, costing you like $1,200, and with the utilities and everything, maybe $1,300 or so, and you can rent it for $2,000 a month, that's pretty profitable, and there's very, very little work on that. And then when your long-term tenant leaves in 3 to 6 months, you hammer the Airbnb again till you find another long-term tenant. Then cancel any leases that are out there with that and stay in the long term. This is called Airbnb arbitrage. And if you're interested, you can connect with me on BiggerPockets, and I will tell you, I don't have it with me, but I can tell you a guy in Sacramento, California, who's training people to do this. I met a guy at a conference recently in Philadelphia. He was wearing flip-flops. He was drinking beer. And it was only like 11 in the morning. And he looked really relaxed with his Hawaiian shirt. So I got to talking to him, and he was telling me he had followed this guy's training. And now he had 21 Airbnb, corporate rentals, arbitrage. He didn't own anything except the furnishings, which he might have rented those. And he had a virtual assistant doing all the reservations and all that. He was traveling the world full time, didn't even have a house. He's traveling around. He said he was making so much money doing this. So I know it works. Connect with me on BiggerPockets if you want to talk about more. Okay, there are other ways to get started. Another way is a lease option sandwich. If anybody wants to talk about the lease option sandwich, put it in the question bar. Okay, so Philip says, hey, working my day job here in Arkansas. Hey, glad you're here, Philip. Anderson Ott says, I have a couple questions. Number one, how do I request a pro forma? Is there a formal process, or would I just email the selling realtor? Yeah, you should be able to email the selling realtor, absolutely. How should I go about researching and selecting a real estate lawyer? I think you should ask some of the top realtors in your city and go with whatever they tell you. That would be a good place to start. You can also look at reviews online. Although I haven't looked at reviews for attorneys, I know that there are some out there. Okay, I'm going to switch over to Facebook. And like I said, I'm having trouble scrolling on Facebook. Israel, hey, how are you? Let's see. Adam wants to talk about Airbnb. What do you think of replacing your mortgage? Hey, Robert, so in about 2 hours, I'm going to be on a call with a guy, probably my 5th call, researching whole life, banking on yourself concept. If anybody wants to reach out to me, I can tell you there's a bunch of great people. I have no connection to any of these people, but who sell whole life. And it's an opportunity that you can just Google this, bank on yourself. And it's a way over many years to replace your mortgage and loan the money to yourself. And it's a way to stay liquid, but also not be paying huge interest to the mortgage company. Robert, if you want to clarify your question and ask me a little more, I'll be glad to share a little more about that. Simone Lott, Airbnb, would love to learn more. Okay, Simone, I hope I'm pronouncing that right. You can connect with me on BiggerPockets. I'm so excited about this that I feel like I could take the next hour talking about the Airbnb landlord concept or the Airbnb arbitrage. And I don't think it would be fair to everybody. So please connect with me. I'll try to give you some resources, or you can just Google that. Learn more about corporate rentals, more about Airbnb. I'm doing this as a customer of this training company that I really like, but I mean, I'm not doing it myself. Hey, thanks, Adam. So Zazinski Garrison says, do you allow pets in rentals? Why or why not? Absolutely. In fact, let me just throw this out. There are lists apartments make of big dogs or dangerous dogs they won't take. Some people are doing really well by taking those exact breeds that other people won't. Because the truth is, some of those breeds aren't as dangerous as the perception. Now, the pro for that is you'll get a lot more renters. By the way, put in a nice dog park at Richmond Commons. You can go to liverichmondcommons.com. It's one of the apartments that we have in Lexington, Kentucky. just to look at our new dog park. You can see it there. It's kind of the horse fencing style. But at any rate, I think there's a downside to what I just said too, though. And the downside would be, well, what if the other people in the apartment complex are really scared and move out because you allow these breeds? So you've got to weigh that out yourself and decide, does that make sense? Simone says, do you think using hard money loan to get started in flipping is too risky? Have a lot of margin. Simone, I heard once that you should price your flip. You should figure the ARV, which is the after rehab or after repair value, take 65% of that, which seemed really low to me at the time, and then subtract the repairs from that. So let's say it's cost you 5% to fix it up, rehab it. That's the most you should pay, 60%. And if you're willing to, if you get a deal like that, and by the way, if you stage it on the other end, which we'll talk about in a second, I think that getting hard money can work. I think it can be a profitable strategy. It's not something you'd want to do necessarily long term. By the way, if you use that whole life policy concept, you can actually loan yourself money and even loan other people. Let's say you can get 12% on your hard money and you're paying back yourself in your bank on yourself concept. So again, it's something I'm researching. Haven't made a conclusion on it yet. CJ says, so the guy you mentioned has 21 Airbnbs but doesn't own anything. How's that? Yeah, he's renting the apartments, and he's got favorable terms with these landlords. And I mentioned going to a brand new landlord to rent from them a brand new development because they have a lot of openings, right? But there's other ways to do it as well. You don't have to go to a brand new one. But he rents the furnitures and the appliances. I mean, all the different things he furnishes it with. You got to make sure you have a washer and dryer. Got to make sure you have all the, up-to-date appliances, internet, cable TV, all that's got to be factored in. So it's not cheap, but I would call it an Airbnb or corporate renting arbitrage. You can either rent the furnishings or own them. We just spent I think it was about $8,000 to furnish 2 900 square foot townhomes in Lexington, Kentucky. And we're really excited to start this strategy. So check back with me. We'll let you know in September how it's going. Robert Howard, do you recommend getting termite bonds on the property? Also, how can I get the insurance company to insure my property for more than I bought it for? Robert, you stumped me. I don't know what a termite bond is. So if anybody else on here, this is an interactive forum, especially if you're on Facebook or if you're on here at all, tell us what a termite bond is. I'm sorry, I don't know what it is. But as far as getting an insurer to insure it for more, there's a thing called insurable interest. They're not supposed to insure it for much more, and you can imagine why. Adam says, I want to learn more about lease options and sandwich lease options. Do you have a real estate license as well? Yeah, I have to keep a real estate license, a broker license, because I am sharing commission with all these 7 agents that go to my website, smithmountainhomes.com, and I get thousands of leads every year, and then I share those leads with these 7 agents. And in order to share the commission, I have a real estate license. And I want to talk about lease options sandwiches. Adam from California. Hope you're not in the fire zone, my friend. And so lease option sandwiches are so exciting. I think you should probably go out and Google it and learn more than I can tell you here. But here's what I can say. And I'm going way back to the question from about 15 minutes ago, the first question. How do I get into real estate with $10,000 or less down? Okay. You go out and find a pre-foreclosure. Someone's about to lose their house to the courthouse steps. Find out how much they owe. Find out how much they have in back payments and penalties and all that. And let me just tell you an example. So in Vinton, Virginia, near Roanoke, Virginia once, I found a guy who owed $148,000. He was $8,000 behind on his mortgage. And so I had to figure out a way to come up with $8,000 to save this from the courthouse steps the following Monday. Okay? So I made a deal with him, put it in writing. I said, I have no commitment to you, no guarantee I can save your mortgage, but I'll try. And so I went out and immediately advertised his home as a rent to own. We had this all in writing, and everything. And I advertised it, and I got somebody to come in with a $10,000 deposit to rent to own that house. Now, he'd already moved out. And so we cleaned it real quick. We took the risk of cleaning it. We painted the door. We might have cleaned up a few things on the landscaping. So I had a few dollars out of pocket in a few days. And he gave me a $10,000 deposit. I took the $10,000. I used $8,000 to pay off or pay up his mortgage. He had moved on. The new guy moved in. He had a $900 a month mortgage. I made an agreement that I would directly pay his mortgage. Now, you can't give the money to the guy. You got to directly pay their mortgage. And there's a due on sale clause in the mortgage that could kick in and ruin this all, but it's never happened yet from anybody I've heard. I know a guy who's done hundreds of these, and you can use what's called a land contract to help with that, but that's more detail than I want to use. So I'm leasing it out to the new guy at $1,200 a month. I'm paying $900 a month for the mortgage, taxes, insurance, etc. I'm making $300 a month, but I set a sale price. Remember, he owed $148 on his mortgage. I set a resale price 3 years down the road with the new guy at $190,000, and I said, hey, if you make every mortgage payment on time and in full, we will give you a small credit, like $300 or whatever, towards your mortgage. Now, 70% of these people, even if they put a large down payment down, don't make it. So then you can rinse and repeat and start in with a new tenant in 2 to 3 years. But this guy did pull it off. He actually bought the house for $190,000. We put about round number of $40,000 in our pocket. And guess what? We had no money out of pocket. We made $40,000. We moved on to the next one. So we've done that a number of times. That's the lease option sandwich. I call it a sandwich because you're the meat and you've got bread on both sides. You've got a guy who's got the mortgage under their belt on the left, and then on the right, you've got the guy who you're leased to owning it to. And I got to tell you, it really works. And they're not easy. I made it sound way easier and simpler than it is. So especially in this market. Okay, so Israel says, when will BiggerPockets come to Phoenix? I don't know, but I think they're doing a California event next year. Adam says 20 minutes away from Monterey. Great, I'm glad to hear that, Adam. Glad you're not near Redding. Robert, protection against little bugs that eat wood. I've never heard of that. I mean, I've heard about the termites. And of course, we get termite checks and we have an inspection done every time there's a home or apartment sold. But I've never heard of getting the bond. So, all right, I'm going to move back over here to YouTube. Nicholas says, I want to, okay, wait, I got that one already. African Forever, refinance or home equity line. I can't really speak to your specific situation, but home equity lines are a great source of liquid capital you can use to make investments. Hope that helps. Any private lenders you could recommend from Austin, Texas, Sean? There's an attorney there named Scott Smith. He's a liability attorney in Austin. And if you get a hold of him, you can ask him if he knows any private lenders. He's very involved in the real estate investing world. And I might think of somebody else in a minute, Sean. Hope that helps a little bit at least. All right, what else do we have here? So, Vinny, is Redding unemployment and housing comps good for buying to live in the city? Now you're talking about Redding, California, and that's Vianney G. Don't know. With this big situation with the fire that's burning as we speak, I don't know what that's going to cause and what that's going to do. Redding has been traditionally a depressed city, but there are a lot of folks in Redding who are trying to make a difference there, and I'm sure they're going to be on full tilt here trying to work with this horrible fire that's devastating the city. So again, thoughts and prayers for Redding, California. Linda Gregory says, what's the name of the training company? I have to I'm not sure that I'm allowed to share that on, and I need to get with BiggerPockets. So if you can reach out to me privately, I'll be glad to share that with you. I'm not sure. I think it may be some form of advertising. Sorry, Linda. Christian says, where can we reach you via email? Okay. I think I can give out my email. It's paul@wellingscapital.com. That's PAUL at WELLINGS capital CAPITAL.com. And you can reach me there and I can tell you more about the Airbnb landlord program or the lease option sandwiches, etc. Someone says, I want to start investing in real estate, but I don't have a mentor and I do not know where to start. All right. Well, so thanks for that, Deniski. I had been investing in real estate for 14 years when I hired a mentor. I spent $25,000 on a mentor. There are mentors I know of from $7,000 in multifamily up to 10, some at 13, some at 17, and then one at 25,000. And I can give mentor recommendations. I don't have any connection to these folks. If you want to connect with me via email or at my BiggerPockets recommendation, I don't do any mentoring, but I know there's a lot of great mentors out there. I want to give you all a warning. There's some gurus out there, some people who will bring you to a weekend seminar in your city at a hotel. I'm not saying they're all this way. And they'll train you and give you just enough hype and information to get you excited about investing in real estate. Then they'll tell you, oops, it's Sunday night, we're out of time. You're going to have to pay, say, $2,000 to come back for another training event. And you pay that, and they'll give you just enough to get you almost there. And they'll say, oops, you need to pay $10,000 to come back for another one. These gurus are making money. And honestly, they're teaching truth, and there's things you can learn. It's probably better to get a mentor or coach who says, here's my price. This is it. I don't ever upsell. I don't charge any more. This is the price. And so that's what I would recommend doing. Okay, so Vianney's looking for the Sacramento people. BiggerPockets rental calculator accurate? Absolutely. Thanks, Lee Bryan. Donnie did it. How can I find the guy who's training on Airbnb arbitrage? Again, hit me up at paul@wellingscapital.com, and I'll try before I do another one of these events to see if I'm allowed to share this. I don't actually have the actual website right in front of me, but that's not the reason. Christine says, I own my first property, a duplex, free and clear, use my own money, renovation is not quite finished. How long do I have to wait or own it until I can cash out some equity and buy another property? Great question. You might be able to do that in as little as a year, depending. If you all can find local banks, by the way, credit unions, sometimes they don't have to play by the same rules as the big banks like Wells Fargo or BB&T, who have very strict regulations on cash out, refi, etc. But I would recommend trying to find a local credit union, a local bank, someone else. And I think you could probably do that in less than a year. I've got a business partner named Jack who's doing that, and he's doing very well with it. And he's cashing out in about a year generally. You just have to get a tenant in there, show the bank that you've got a tenant history with that new tenant, and that's the best way to get a cash out refi. All right, Linda, lease option sandwich. A lot of people want to know about that. So hopefully my answer helped a little. Jason Toledo says, starting off with a house hack using an FHA loan to start with, it may not cash flow as I live in one unit, but after the year, I can move out and rent both units to cash flow it. Any tips? Jason, I'm all for it. I think it's a great idea. I know lots of people who've been involved and done it that way, and they live and they house hack in a duplex, then they move on after a year. FHA is a great way to go, and that's a great way to get started. Business line of credit or HML? Brian Carrillo says, well, I'm showing my ignorance again. I don't know what an HML is. What would that be? Harry, Mary, Lucy. Okay, I'm showing my ignorance. Sorry. Maybe it's a home equity loan. Yeah, I would do a business line of credit. I would do a home equity loan rather than a business line of credit if you can. So I would use the equity in your home if you can. How do I get a mentor like a broker? So you can be mentored by a real estate broker, a commercial or residential real estate broker. You can be mentored in property management. That's another area you can find a mentor. Third, you can be mentored in asset management, which is a little tougher to find. But those are 3 areas you can find a mentor. BiggerPockets has lots of mentors. I don't have any connection to these guys, so I can tell you, Reed Goosens, he is phenomenal. And he has got a great podcast called Investing in the United States, I think. 37th Parallel is my mentor, and I still have them. And that's the one I paid $25,000 to for multifamily mentoring. Scott Myers can mentor you in storage units. It's a big thing right now. Mobile home parks, Kevin Bupp. They can mentor you. And again, I know these people. They've been on my podcast, How to Lose Money, but I don't do any mentoring myself. I'm pretty busy right now doing apartments and self-storage. By the way, if anybody wants to talk about self-storage, I'm super jazzed about it right now. And so we can talk about it. I can talk about some of the things that we have learned in researching it later. So, okay, Assam says, hi, Paul, how can I get a very close appraised value on a single family home prior to closing on an investment property? I had a situation where the market value was way above the actual price, which the bank refuses to lend against, and you end up paying the difference. I like appraisers somewhat, but I love realtors. And so I would get 3 realtors to give you an opinion on the price. And that is free. You don't want to use them, but you want to give them some kind of a carrot for doing it. You can actually get a BPO, broker price opinion, for about a couple $100 if you can't get one to do it for free. So hope that helps us. Hard money lender. Yeah, I would get a business loan rather than a hard money lender. Quentin, you guys are all ahead of me. You're probably laughing at me, making fun of me on this Saturday morning because I didn't get the HML. It's the first time I've heard that term. Your opinion on a sustainable strategy buying single family residential. I bought 3 in the last 30 days. Congratulations. And I'm starting to feel overwhelmed. Debt is growing fast, says S.Kin6. Guys and gals, I don't know. I don't know the best way to find single families or duplexes or fourplexes or any multifamily right now. The market is terribly overheated. And let me just tell you, I don't want to discourage anybody, but a lot of people who get into single family and small multifamily find that they get overwhelmed, they try to self-manage, and they give up. And so a lot of people who have that goal of building up a portfolio of 100 or 200 single families quit after about 20 or 30 or 50. And this is my plea to you to use property managers. I know it's expensive. I know you don't build up the equity. I know it's a hassle. Use a property manager and you might keep your sanity, stop drinking, start enjoying life, and be able to build up that portfolio. But where am I going with this? You can find portfolios of single-family homes that you can get financing on. If you have a handful under your belt, you can go to crowdfunders like Fundrise, Realty Mogul, CrowdStreet, etc. And if you have a handful under your belt, they will fund you. They will help you get investors for your single families. You can also go to banks. Like I said, local bank, local credit union. Convince them you're credible. Dress nice, walk in, show them your portfolio, show them what you've done, and say, hey, look, I've got an opportunity to buy 20 of these homes. Another advanced strategy is to buy a tape of homes from a bank. A tape sounds weird, but those are foreclosures that they've taken back in, and they want to sell them in bulk. So Wells Fargo might have 2,000 houses, and they'll sell them off in groups of 200. That's a big piece to bite off, but you might be able to find someone who has the 200 and buy a chunk of that. So, all right. I am literally 3 days, Andersonaut, into starting my learning process, so thanks for the help. I really hope this was helpful. Thank you. Robert Smith says, hi from Atlanta, Georgia. How do you feel about a duplex in a rural South Georgia city where the numbers work in BP Calculator, but just concerned about keeping it rented in a rural area? Robert, I don't want to discourage you, but I can tell you as far as apartments, we're a little nervous about buying in rural areas. I've done some rural areas, and most of my horror stories as a landlord, which I didn't mention, I did that too, have been in rural areas, and 3 of them, 3 out of 3, double wides. One was actually in a right near Washington, D.C., and that's in my latest BiggerPockets post, how I lost $5,000 in my first flip or something like that. But that was near Washington, D.C., but the other double wides and single wides I've done have been in rural areas. They've been disasters. Am I allowed to pull my hair up like this? Drive me crazy. It's been a mess. It's been a nightmare, and I would not do that. Would I own a mobile home park? Absolutely. Would I own mobile homes individually? I don't want to do that. So I would not recommend it. So hopefully that helps. I would shy away from a rural area. Self-storage in more smaller rural towns, I feel a little bit better about, but there's a lot with that we'd have to talk about. Okay, mentors, can you rename them? Ashkin says local banks for mentors, multifamily mentors. So a couple of multifamily mentors I really like. Reed Goossens, ReedGoossens, friend of mine, podcast guest, and he's got a great mentoring program. Joe Fairless has an expensive but fantastic program. He's on BiggerPockets. You can also find guys like Jake and Gino. You can find 37th Parallel. Michael Blanc, B-L-A-N-K. He's a huge 37th Parallel contributor. He's also a great mentor. He's got some great mentoring programs. So hopefully that helps. 37th Parallel, and all the ones I just mentioned are multifamily, by the way, because that's what I know more about. Joseph says, what are good questions to ask the banks to be sure they can do the BRRRR, and will you rather go with a broker or in-house financing? I think you just have to explain your strategy to the bank. Explain the BRRRR and show them your strategy. Sit down with the banker. Again, the smaller local banks sometimes are better and more flexible with their terms, not always. And so that's what I would do. I would just explain it and see if they will do it. Christine says, great, thanks. Okay, so I'm not a millennial. And for some reason, I can't get the Facebook to scroll. Don't try to help, because I've had my wonderful millennial assistant here, and he says when I'm on BiggerPockets Live, Facebook Live on my management screen doesn't scroll. So I can only see a handful. So 37th Parallel, Ashkin. That was the name of the one there. So if you have a question on Facebook that I missed, I know I missed a bunch because I could see it out of the corner of my eye scrolling. Feel free to put it in right now. I'm going to focus on my Facebook Live screen for a minute, and I will try to answer everything that comes in. Joseph, you're welcome. All right. So, yeah, Reed Goossens. Joe Fairless, that's Fairless. There are other great multifamily mentors of various price ranges. So we only have about 20 minutes left. So I'm going to try to get through as many questions as quickly as I can. So fire them off. If you're on Facebook, I am going to try to focus on that after I answer this question from Quentin. How many people are you asking about mentors? Is it people that are just starting out, or are you established and looking to break through to the next level? It's both. I mean, some of the people at the highest levels of real estate investing are also using mentors. In fact, I'm probably going to get another mentor. I'm probably going to spend $20,000 this year getting a new coaching program on top of the one I have with 37th Parallel. The greatest people, I mean, the greatest quarterbacks, the greatest Olympic athletes, the greatest golfers, they still have coaches. I mean, Tiger Woods still has a coach, okay? So Drew Bradford says, what are the typical hard money rates? Something like 3% up front, which means if you borrow $100,000, you only get 97 of it, but you owe 100, and then about 12% a year. Some are up to 18%. I've never seen less than 10%. Sebastian says, yes, Paul at Wellings Capital, thanks. Can I get a copy of this video? DJ, you should be able to get a copy of this video later. I'm really honored that you asked. Thanks. Best start for multifamily, Ashkin says. Okay. Do you know any construction companies in Dallas or Houston? I don't, Carmen. Could you repeat your email address again? All right. It's Paul at wellingscapital.com. Thanks for addressing my questions. Hopefully I never make it to the black flag, and keep on the green. Love your podcast also. Thanks. Hey, if you love How to Lose Money, or if you think you would, not lose money, but the podcast, please give us a thumbs up, a heart, a like, a share. Thank you so much. Okay, I'm back over here on my Facebook panel, and I'm ready to answer any more questions that come in. Joseph Adabeo says, I was just thinking about the storage space you mentioned on how do you get into that line of real estate investing? Well, you can go on Self Storage Academy. I have no connection to them at all. Scott Myers, and he's got great training. There's about 10 self-storage books online. I actually ordered about 7 of them the other day because I'm trying to learn this space myself. I'm trying to go deeper with it. As far as self-storage, you can buy your own facility, get a few friends together and buy, say, $1 million facility, maybe 20,000 square foot facility, or you can invest with a third-party syndicator, and that's what we're doing. We're pooling together investors to invest with other people. And so you're welcome to check that out. There's other people investing in self-storage as well. You could probably invest through a portal, like a crowdfunding portal. There's not very many deals online, but there are some on those portals. Taylor says, how can one have up to 10 mortgages on their personal name if their debt to income ratio won't let you reach that? Well, I don't think I know, Taylor. I know people have way more than 10. And so the income will rise every time, right? It's not just your personal income. Of course, it's your income from your rentals. And as your income rises, your debt to income ratio hopefully would stay in the 50 to 60 to 70% range. Paul Thompson says, just BRR to single family, best way to leverage into third property. Pull all the equity you can safely pull out of those two, Paul, and go to the next one. Hey, you guys, so if I can remember it, so I can see it on my bookshelf, but I don't want to leave here because you guys might hang up on me. Here's a book, The Complete Guide to Buying and Selling Apartment Buildings. And that book I mentioned on the BiggerPockets podcast recently, about 30, 40 pages into it, it's got this unbelievable chart that tells you the difference between buy and hold and buy and rehab and then resell, and how you can build up from a twoplex to a duplex to a fourplex to an 8 to a 12 to a 20 to a 50 to a 100. And they show, even though it's somewhat hard to imagine over 30 years how they do this, but they show the difference. It's 40 times in this analysis, 40 times more profitable to keep pulling your equity out or to actually keep selling and buying up. 40 times. He shows how you can actually have a portfolio in 30 years of $90 million, starting with $10,000 in the beginning. $90 million in 30 years. But if you just buy and hold and just keep paying down the mortgages, you'll have your mortgages paid off, but your portfolio will only be $2 to $3 million. Wow, $2 million versus $90 million. So pull out that equity safely and go on to the next one. I'm actually not a big fan of having a lot of debt, but safe debt in real estate in markets that are appreciating is actually a great way to grow your wealth. Amanda Grace says, self-storage next steps. Can't wait to watch the repeat on this one. Thanks, Amanda. Next steps. Buy one of the books on self-storage. Go to the Self-Storage Academy. My business partner spent 3 days with Scott Myers in Indianapolis last week at the Self-Storage Academy. Again, I have no connection to them, but they seem to be doing a phenomenal job training people. Any mentors you know in Charlotte, North Carolina? My mentor was out of town. I don't think you need to have a mentor in town. So I'll just leave it at that. I don't know anyone in Charlotte at all who does mentoring. Hey, Nathaniel, 2 million versus 300 million. Ashkin, is that the ratio? When I last looked at the book, in my version of the book, it's got 2.3 million versus 92 million as the difference. And again, the book is called The Complete Guide to Buying and Selling Apartments. Disclaimer, I love everything about the book. It's hundreds of pages packed with great stuff. Steve Burgess, Berges, is the author. But I think he's way too aggressive on his time frames for flipping these. We talked earlier about this on the show. I think it's going to take more like 2.5, 3 years to flip through these apartments as you go up to another one. I know a guy in Arlington, Texas, who had a $1,000 bonus from work. He bought a duplex for $27,000 during a recession in Dallas, 1993. He parlayed that duplex up to a fourplex, up to an 8, up to a 20, up and on. And when I met him, he was selling his 131 unit apartment complex for, I think it was about $11 million. He literally started with $1,000. His wife later invested $120,000, but pretty good deal, huh? He had I heard later he had an $18 million portfolio, and it took him 23 years to do that. So Farhan says, any recommended mentor for multifamily properties in Bradenton area? Farhan, nope. Again, I don't necessarily think you need to go local. So Mark Torres, hey Mark, welcome back. What are different ways to take advantage of owner-occupied loans through the bank? Can I have multiple owner-occupied properties? I don't think so. I think you can move out after a year, and I think that's the best way to do it, but I don't know how you can do that. I've heard VA loans. I know a lot of people are in that situation, but if you have an opportunity for a VA loan, there may be opportunities to have more flexibility. How much should you pay yourself from a deal? Darius, as little as possible. I don't really know how to say that any other way. Best book for multifamily. Ashkin, I really like the one I mentioned from Steve Burgess. And I'll leave it at that. I've got a book that I wrote myself called The Perfect Investment. I won't get the subtitle right because I don't have it with me. How to create enduring wealth from the historic shift to multifamily housing. I got close. It's called The Perfect Investment. I like the book, but I also like Rich Dad, Poor Dad. I like Steve Burgess's book better than mine. He's got some great strategies. Mine's more of a fun read, but it does give you an intro to large-scale multifamily. Thoughts on Detroit? Gavin, I lived in Detroit for about 10 years, and I've heard it's really coming back. Don't have a great opinion on it. Don't know enough about it right now. Burgess is spelled Berges. Thanks. The Complete Guide. Okay, Ashkin, The Perfect Investment. Thanks, Ashkin. So the person, by the way, who mentioned the green flag and the black flag was referring to my How to Lose Money podcast. Sean says, in a recent video, you said your favorite restaurant closed. What is your new favorite restaurant in Greensboro, North Carolina? I don't know. Sorry. I don't think if I think of it, I'll let you know, Sean. Ryan says, thank you for the question, seriously. Do you rent out Section 8 as well? Ryan asked me. No, I don't prefer Section 8, but a lot of people do very, very well with Section 8 government funding apartments. Are you familiar with the VA loan strategy, which allows you to buy 4-unit multifamily with no money down? No, you'd have to look that up, but I've heard from somebody who said they knew that it was very possible and to do a lot more with VA loans. Jeff says, hello, how do I decide where to flip or hold a single family house? I don't know. Depends on your long-term strategy. It's a great question, and I wish I had an answer that would be applicable just for you. If you can pull the safe equity out of it and then go on to the next one, you get some of the best of both worlds because you get your equity back. You still make a little cash flow. You get to hold on to the property, and you get to move on to another one. Nathaniel, how important are the comps distance from the subject property? I can find properties, but sometimes at the most, comps are a mile away. It's really hard to find properties that are half a mile away. It's driving me nuts. The neighborhoods are not that different from one another. Nathaniel, get a good realtor. I think realtors know this comp business. Well, I don't want to say they know it better than appraisers, but they're sometimes more realistic than appraisers. That's my best answer on that. Jorge says, are you familiar with VA loan strategy? Yeah, I wish I was. Can you define safe equity? Logan, there's a thing called the debt service coverage ratio, DSCR. They also call it debt coverage ratio. You want to be at least 1.2 to 1.3, which means you want to have enough revenue to cover your debt with a 20 to 30% safety margin at the minimum. So if you can get a 1.4, 1.5, 1.6 debt coverage ratio, I would say that's safe equity. The reverse of the debt service coverage ratio is, of course, the loan to value ratio, and you want to get 75% or less typically. I hope that helps. In your opinion, is Greensboro a good place to invest in multifamily? So. We've got 22 different metrics we apply to look at a different market or a different market, and Greensboro does not meet all those. Jorge says, thank you for calling me Jorge with a J and not George. Yay! Thumbs up. Thank you. I'm glad I got it. I know a real estate broker named Jorge. So Jeff, Packing Cubs, thank you. You're welcome. Hello, how do I decide to flip or hold? Okay, I already tried to answer that. Didn't do a very good job. I'm going back here to Mark Torres. What are the different ways to take advantage? I already tried that. Farhan, sir, any recommended mentor for multifamilies in Bradenton? All right. I mentioned that I don't think that has to be local. Carrie Adams said, could you give an example of that? Carrie, can you specify? Hey, y'all, we are seconds away from the top of the hour. So if you need to run, would you be kind enough? If you enjoyed this, would you give me a like, a thumbs up, a heart, a share before we sign off? I'm going to stay on here for a little bit more, and I will try to answer some more questions live before I go offline. Any thoughts on the Orlando market? It's booming, Sebastian. Unbelievable. But what goes up often comes down. And we also found out in the Florida in the downturn last time that they had I think it was a 55% drop in a lot of markets in their single family residential values. So it's booming. In my opinion, far too risky for me. I'm happy to buy in Florida at the bottom of the cycle, not anywhere near the top. I feel the same about Nevada, Arizona, California, and Northwest North Dakota, where I bought before. And I hope I didn't offend anyone, but that's how I feel. At my age, I don't like taking risks. So there you go. Carrie Adams says the 1.3 rule percent. Okay, it's not 1.3%. Thanks for clarifying, Carrie. It's 1.3x. So if your mortgage payment, including taxes and insurance, is $1,000 a month, then you want to make sure your income is at least $1,300. I started to say $1,300. I guess that's the same. So you want to make sure you're at least at about $1,300 to cover your $1,000 payment. Now, y'all, you know this intuitively, but in single families, there's a big risk, because if you're vacant, you're 100% vacant in a single family. But if you have a duplex and one side's vacant, well, you're only 50% vacant. And if you have a fourplex, you're only, I know, I get the math, it doesn't have to work this way, but if you have one vacant, you're only 25% vacant. If you have 100 units, you get the idea, right? So single family has a risk, an inherent risk. So I would recommend that if you're going to do single family, get more than one, because you don't want to be 100% vacant and have to be working overtime at work to pay your mortgage. A lot of people go down that road. A lot of people get frustrated, and a lot of people therefore turn to large-scale multifamily, which is why I wrote my book. 3 places to invest out of state, Ashkin says. I like Charlotte, North Carolina, Raleigh, North Carolina, Greenville, South Carolina. That's all in states nearby to me. I also like Houston, Dallas, and San Antonio. By the way, a recent review of 62 multifamily markets by Green Street said that Houston, surprise, was the number 1 multifamily growth market for the next 5 years. So if it's great for multifamily, I'm guessing it's going to be good for single family as well. Dallas dropped down to a B level. Now, we thought Dallas was better than Houston, so I'm a little in shock still. I just found this out, but hopefully that helps. Glenn Hill, hey, how are you? Carrie says, thank you for your time. I missed your name. My name is Paul Moore, and I'm with Wellings Capital. We do multifamily and self-storage investments. Sebastian, I agree. Thanks. All right. So Kyle says, I'm an agent in Raleigh. Hey, y'all, if you want to connect with Kyle F. over on the YouTube channel, hopefully you can get a good real estate agent there. Glad you're joining, Kyle. I'm actually looking at an investment property out in, skip my mind, 17, maybe 20 miles east of Raleigh. And it's, I can't think of the name of the town. So 60 people move to Raleigh every day. I've heard some reports say that Wake County, which is where Raleigh is the number 1 growing county in America. Of course, I've heard other people say Dallas and other people Charlotte, etc. So Marcus says, I just set up my LLC for real estate. What do you suggest I do next in the Atlanta market? Marcus, I don't know where you're at. Don't know your history, your story. You can connect with me on BiggerPockets if you want. But I really do recommend the lease option sandwich and maybe considering the Airbnb landlord. If you haven't heard, the Airbnb arbitrage is an awesome way to build wealth with very little money or time out of your pocket. Very little risk compared to others. Glenn Hale says, what do you think about the BRRRR method? I love it, and it works for apartments as well. I mentioned Steve Burgess's book there. He doesn't mention that method, but he does talk about something similar. So, and I would love to get to a few more questions. So, hey, Ryan, DFW market. Yeah, it's awesome. DFW is hot. I agree. Best restaurant in Greensboro. Darn it. Can't think of what it is. Hey, Sean, I'm glad you, I love Smith Mountain Lake. I don't know if you've been here. I was out on the water the other day. It was amazing. What would you recommend in purchasing multi from turnkey providers? Mark, if the numbers work, yeah, the problem is multifamily across the nation, even in tiny little hamlets and towns. Is hamlet still a word? They're overpriced. You can get the best off-market deal. The broker or the friend or the uncle can tell you, hey, this is off-market. It's going to be amazing. They're usually way overpriced. So it's a really tough time. And if you're buying from a professional wholesaler, think about this. If they know more than you, and if they know the market's really hot, you might have a hard time getting a great deal. So you're welcome, Glenn Hale. What was Steve Burgess's book called? Okay, so it's Steve Burgess, Berges, and it's called The Complete Guide to Buying and Selling Apartment Buildings. And it is chock full, another old-fashioned word, it is packed full of great ideas to maximize the value of multifamily properties. Highly recommend it. I think his time frames are too short. Like he talks about turning these things over in a year. Almost impossible to do as you grow into these larger multifamilies. I can't imagine how you could continue to do that. And by the way, the tax laws now are, somebody at the beginning of the show asked me about flips with the new tax law. The new tax law is giving advantages to people who hold their properties 36 months or more. That's 3 years or more, which are making it which would make me think that maybe flips are not typically in that category. By the way, if you have a flip that goes over 3 years, you probably won't be flipping for long. Drew Bradford, is it okay to use a wholesaler for your first flip? Yeah, if you know it's a good deal. Sebastian, that's right. The Complete Guide to Buying and Selling Apartment Buildings. Okay, good. James Morris, hey, thumbs up to you too. Thank you. Art asks, multifamily in San Diego. Highly overpriced. Highly desirable. It could work. If you get an inside track on a great deal, ask yourself this. Why is this such a good deal, and why am I getting access to this when there's these huge REITs and vultures circling, looking for multifamily, and all these people who are more experienced? Why am I getting this good deal? You've got to ask yourself the hard questions. My next post on BiggerPockets, by the way, is going to be called The Curse of Optimism, or The Dark Side of Optimism, or Optimism Has a Dark Side, or How to Be a Pessimistic Optimist. I just thought of that. If you guys would vote on the title for my next post, since I just threw out 5 of them, that would be great. It's about how it's really, really important for your life, for your health, for your happiness to be an optimist, and how it's really important not to be an optimist and fall in love with real estate deals. You know, the best way to get burned in real estate is to fall in love with the deal. You need to fall in love with the numbers. So I'm contrasting on my next article the optimist view of life versus the skeptic's view when you're evaluating real estate deals. Warren Buffett says that optimism is the enemy of the rational investor. And another great economist, Peter Bernstein, said the most dangerous and risky moment is when you're sure you're right. Something like that. Anyway, I've been sure I've been right a bunch of times. Patrick says, how do you determine ARV? That's the after repair or after rehab value. Thanks, Joseph. It is determined by a realtor and you putting your heads together, doing the comps, and realistically appraising, assessing what the value would be once it's fixed up. I want to preach and scream and yell at all of you guys, stage your homes. It is a huge worthwhile investment. I've increased the value of multiple homes by beautiful staging. So get a home stager, learn to do it yourself, watch Joanna Gaines, whatever it takes, stage your homes. Because think about it, if you're paying a realtor up to 6% to sell your home, if you can offset that by getting 6 or 8 or 10% more by staging it, selling it quicker, saving interest, not having the price drops that typical empty houses have, it is a huge benefit. And honestly, I would not want to ever sell a flip house without staging it. Highly, highly recommend it. How to be a pessimistic optimist. Thanks, Lauren. I'm going to write that down. Charlie Cray says comps nearby the property. Totally agree. Somebody said, how do I buy? Joseph says, okay, Mark, is there any way to buy self-storage units, single storage units? If you mean literally single storage units, I don't know. I would buy a very cheap lot and build those. If you mean a small facility, you can go start calling realtors around the area and finding self-storage facilities. Okay, I'm about to wrap this up. So anybody who hasn't given us a like, a thumbs up, a heart, a share, I can't tell you how much it would mean to me if you would do that. And let me know if this was valuable. As we close up here, what you would like to talk about in the future. We've already talked about self-storage. You can find one of those on BP Live, YouTube Live, Facebook Live, in the archives. I've also talked about other multifamily, single-family strategies. But what will be valuable for you? By the way, I'm going to do another episode on Monday. I'm going to talk about how... I'm going to talk about something, I promise. No, I'm going to talk about how the ultra wealthy perpetuate their wealth using real estate investing. And it's going to be real fun. I hope you'll join me on Monday about 4 p.m. Mountain, 6 p.m. Eastern this coming Monday. I'm going to take a 1 or 2 more questions. So Carrie Adams says, do you know of a book or article to help step-by-step guide to buying from a for sale by owner? I haven't purchased a property yet, and I feel like I'm freezing up. Carrie, it's easy to do. I don't know a way to do that. I will warn you all. I've sold for sale by owner. I'm even though I'm a realtor, I recommend people try for sale by owner if you stage your house, by the way. And honestly, for sale by owners, you think you'd save some money. You actually will probably spend more. Because for sale by owner sellers are the independent types. Sometimes they're a little proud, and sometimes they think their home's worth more than the realtors, the mean realtors and the mean seller and the mean buyers are telling them. So sometimes they actually want more for their property than it's worth. And so I hope that helped. Aren't you the self-storage guru? Hi, Locke. Thank you. I'm gonna be. I'm not yet. Scott Myers, I think, is probably the self-storage guru, and there's some other ones as well. I invest in self-storage. I wrote an article that was published in early July about why I love self-storage. It was a new revelation for me just this year, so I've only been at it about 6 months, but I'm learning all I can, and hopefully a year from now I will be, but I'm really honored that you thought that, even if you were joking. So, steps to getting your first property, I would use a lease option sandwich. Oh, thanks, Jorge. Appreciate that. Your live event's been valuable. Do you have any experience in combining multiple mortgages into one and thereby creating a bucket of equity to tap as needed? Jorge, there's some real downsides to that. If one property goes really, really south, it could drag your whole portfolio down. I would probably try to keep mortgages separate or try to use a whole life policy. So no knowledge in the Minneapolis-St. Paul area, except there are some great realtors, Great Lakes, and great fishing up there. I'm actually heading to Minneapolis in 2 weeks from today to fly on up to Canada to go fly in fishing with my son. We're going to be at a remote lake in Northwest Ontario, and you won't be able to reach me. Neither will my wife. Uh-oh. Hey, Mike. Can you repeat the self-storage info? Yeah, Scott Myers has the Self-Storage Academy, and so I would check that out. Jan says, is self-storage better than multifamily? Okay, this is going to be the last question I'm going to take. If you all want to connect with me on BiggerPockets, feel free to do that. You can look me up. Again, I'm Paul Moore. Right now, we're reporting to our investors that if we can find a multifamily property, we're expecting the IRR, the internal rate of return, to be about 12 to 15%. And that's if we can find a multifamily property. We're also reporting that if we invest in a self-storage property, we expect the IRR, the internal rate of return, to be between 18 and 24%. So hopefully that answers the question. Oh, by the way, we can find self-storage properties. So in two ways, the guy who wrote a book called The Perfect Investment about multifamily is confessing that self-storage at this moment is better. Now, I still think multifamily is the perfect investment. I really do. But self-storage is a better investment for most people right now. So I'll leave it at that. I hope that helped. Hey, you guys, keep Redding, California in your thoughts and prayers this weekend. Have a great weekend. I am going to wrap this up before I get in trouble. And I look forward to seeing you all again here Monday evening at 6 p.m. Eastern, 3 p.m. Pacific time. And we will talk more about how to partner, how the ultra wealthy maintain, grow their wealth, and how you and I are not invited to their party. But we have a way to get in anyway. All right? Take care. Thanks. Have a great weekend. And again, thanks for joining. It has been awesome. I've really enjoyed it. Take care.